This isn't 1776, where back in the day we settled things by horse and bayonet. It's 2022, where we settle it by fighter jets and nuclear strikes, options and ETFs specifically. You would think that the way we ended the week on Friday today at closing bell looks like we're going to crash. Everything's coming to an end. But actually, what I'm about to show you in a couple slides is it's just part of the natural cycle for the weekly chart. It was supposed to be a down week. And today's PPI number was just a means to an end. I'm going to show you a little bit about that too, how the markets did know what that CPI number was. But being that it was on the final day, Friday, today, of a down week, this was just a means to an end. And that end is next week. CPI, FOMC, Tuesday and Wednesday, respectively. That is the means to an end. And we are actually setting up on the charts to go into first the CPI. Okay? What I'm going to show you momentarily is actually what the MACD pattern must do or should do if the markets actually think Tuesday morning's CPI number is a cool number, is a rally number. Okay? Mind you, I do believe the markets already know what that number is. I think that number has been leaked from the government or whomever calculates the CPI, and they already tell the billionaires exactly what that number is going to be. And come around Monday-ish, those billionaires are going to be positioning themselves accordingly for Tuesday morning's CPI number. Okay? So let's get into what happened and for this week. Let me turn on my laser pointer first, though. Okay. Let's start with the weekly chart here on the left-hand side. It's a SPY. Now, I want to put things in perspective for you. Let's first look at, since the October low right here, onward. So, obviously, this is down. This is the low for the year. Okay? Up, up, down. Back test. Up. We'll just call it down because technically it's red. Up, up, down this week. Okay, so to put it in perspective for you guys, it's just basically rise, rise, back test, rise, back test, rise, rise, back test. Okay, so actually, as part of the inevitable cycle, natural cycle, this week was supposed to be a down week. Okay, help you put that in perspective. What did you expect? Another green one right here? Do you think that, mind you, we haven't cracked this weekly EMA line in all of 2022? Would that have been reasonable to expect this week to be in the green and close, above the red EMA line? Actually, the answer is no, right? Not reasonable to expect that. So we ended the week down right here today. This PPI number that came out today, as I mentioned earlier, was just a means to an end. It was just a cog in the chain. I'm going to show you some more details about that momentarily, okay? Now, the SMA line, I've recalculated, it's now 392.33 because I looked at the most recent as of right as the market closed today. That's where the weekly SMA is, 392.33. So these are your new targets coming into Monday. Okay, so when you think about it in weekly terms like this, it's actually like, well, yeah, I guess that makes sense. This is supposed to be a down week because you've already had 2 consecutive up weeks prior to that. Okay, check out the MACD. Look at that. That doesn't look bearish to me. It's actually, that is higher than that. This, by the way, would have been the August high. So even though the current high is lower than the August high, right? That's clearly downward. That's upward. In some circles, they call that bullish divergence. Okay? Now, where did we end on the week on the RSI? 43. Ideally, you'd like to be at 50, but that's pretty much smack in the middle. Right? That's not like October low right here. Actually, yeah, I mean in October-ish, right? That's not like that. That doesn't look like that, right? We can all agree to that. That's not way down here. Pretty much, middle-ish. Okay, slightly below 50 at 43. All right, that's the weekly. I wanted to point that out just so you guys can like take a step back. Today, I'm not really even going to get into the intraday stuff. I'm gonna stay more macro level. So that's the weekly. Okay. Here is the daily on the right-hand side here. Okay, I want to point out a couple things. Let's first start off with relative. Here's the daily close today. To help you keep it in perspective, we closed today. That was a huge inverse red candle, right? That's obvious here. Let me zoom in just a touch so you can just see that. There we go. Inverse red hammer. Okay, that's clearly bearish, right? You got a big wick up there, downward pressure. Okay. But when you look at where it closed, although it seemed painful, that is higher than like the lower low, okay? The lowest low, which touched the SMA 20 line. Okay? So it's we are not out of the ball game by any stretch. Okay? And also I want you to keep in perspective the daily close right here. Look at how high above its daily EMA 50 it still is. See that? See that? It's if it was that bad, why haven't we lost containment yet? Right? Okay? So, in fact, when you're still tracking to the weekly EMA 50 up here, weekly SMA 20 down here, right? 392.33, 403.29. You're still tracking to the weekly EMA SMA lines. You're not tracking to the daily. Well, here you kind of are. Here see the daily SMA serving as resistance right here. Okay, but you're well above your daily EMA line. That's not bearish. Okay, you're still in the ball game. So I wanted to point that out. Now, moving on to the daily MACD. Okay, here's the low. Came up. This is the October low, basically. October 13th right here. So basically, we are now just going over the rainbow and coming down. I have 3 X's here for approximate destinations. Which one of these destinations will it be? Now that I do not know the answer to. Obviously, if it's this one, that's bullish. If it's at the 0 line, the second one, I would consider that still bullish. If it's down here, okay, now you're getting bearish. Okay, now you're getting bearish. Okay, so that's the daily. That's the daily. And the RSI, look at that. Closed right at 29.95. Call it rounded up to 30. That red line's the 20 line. Okay, we got down there this week, but we popped back up. Prior to this week, though, we haven't really been decisively under the line. The last time we've been there was the first week of November-ish. Okay, so to also put that in perspective, when was the last time we've been decisively under the line? Besides this past week, and that was first week of November. That was over a month ago. Well, no, we'll just call it a month ago. Call it a month ago. Okay, so help you put that in perspective. So the RSI, it just came up. This whole time, this is in the grand plan. This is August. Remember that? Here's the August peak. Down, 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 down. October 13th low, higher notch, up, 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 to come down. So it's naturally going to stop somewhere. It's got to stop somewhere. Okay? So put that in perspective. The daily is over the 0 line, right? Okay. So there you have that. And that is what I want to show you about that slide. All right. Okay, here is the S&P 500 4-hour and the 1-hour chart. All right. Now, actually, let's start with the 1-hour, and then I'm going to move over to the 4-hour chart. How about that? Okay. Now, let me also zoom in. So you'd have to squint. Okay. First, I want to talk about today. Yesterday and today. Okay. So here it is. Here's today, as of close 4 p.m. Eastern time today, Friday. Now, given that you just saw the weekly chart, right? You saw that big red candle, right? So Friday, Thursday, Wednesday, Tuesday, Monday. Starting from right here until right here. Clearly down, obviously. But as you just also saw, that is a part of the natural cycle. It's going to be down, right? It just has to be because prior to this, you had two green candle weeks to be up, right? To put us into this range, right? Okay, so therefore today was effectively a means to an end. And that end means, yeah, this is going to be a down week. The whole week overall is going to be down. I contend, and I mentioned this in today's live stream, that, the markets already knew what that PPI number was. The markets clearly knew what it was because right at closing bell yesterday and futures, look what it did. Up, 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 up. And then PPI comes out, bam, comes down. Right? Boop, comes down. And then it comes back up right here. It comes back up only to come down again. So basically, let's say the markets, if they knew the number was going to be cool, they wouldn't have rocketed up like this. They would have just stayed low and then rocketed up. They knew the number was going to be hot, so they can rocket up, knowing they're going to lose some ground. In fact, come down and kiss the weekly SMA for that matter. But spend the rest of the day, pump it, pump it, pump it, pump it, pump it, only to lose ground by the end of closing bell. That was all planned, guys. All planned. They pumped it up overnight in overnight futures and pre-markets because they knew that number was going to be hot, only to fall. Basically, today was just eat time off the clock day. Just end the week. Just end the week right at the SMA 20 line. Okay? That's exactly what their plan was all along, actually. Because, remember, as I pointed out, starting right here through today, was supposed to be naturally a down week anyways. Right? You just saw the previous slide. You've already had 2 positive green weeks. You got to have a red one. You got to have a back test week. You got to have a back test week. This week was the back test week. That's basically how to say that. Okay? Today's PPI, as I said a moment ago, was just a means to an end. And that end was to close exactly at the weekly SMA level. Close Friday exactly at that level and to restart the clock. Get ready for next week. Okay? That is basically the exact plan that I believe the market makers had for us. And now I'm about to get into, then what's the plan for next week? Right? Because that plan for next week is going to be decisive. The rally will live or die next week. Literally. Tuesday and Wednesday will determine the fate of S&P 500's Declaration of Independence in 1776/2022. Okay? So, okay. 1 hour chart, MACD. That's what I'm going to focus on. So, starting Sunday night, here's what I think should happen if the markets not only believe, because I believe they already know the answer to Tuesday's CPI number, right? For this to be a low CPI number, what I believe the markets are going to do is look for futures on Sunday night going into Monday, right? When Sunday night futures opens up, look for futures to be up. I will say up by at least a little bit, just up, not down. Okay? Look for it to be up. Okay? And look for it to be up all night, possibly even into Monday, and possibly have Monday all day be up as well. Okay? But for futures Monday night after close, I would think it's going to go down. Okay? Heading into CPI, down. Essentially what I just described for you is right here in the red circle. Sunday night, possibly even Monday, all day Monday, but Monday night goes down. That creates the higher low. That creates the notch. Okay? You have to have this notch, higher low notch in the MACD to stop the fall. Otherwise, it's like this: lower lows, lower lows, right? It's just going to keep on going. Something has to stop it. You have to create this notch, specifically on the 1 hour time frame. Okay? This must happen starting Sunday night when futures opens back up. I mean, the good news is, you see how close to the zero line it is? That's good. See what I mean? That's positive, right? But something has to reverse the trend, and it's got to start Sunday night. Okay? When you have this notch, then you can start the rocket ride in reverse, back up. But until then, here's another great example of this. Down, 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 down. Oh, so here's a good example. This is where we are right here. See that? Where we are right here. See that? You don't have a higher low notch until you get down to, like right here, right there. See that? So you've got to have the notch. And to me, it's most reasonable that it starts on Sunday night. Now, in the event Sunday night is still like down, okay, I mean, that's always possible. Oof. So, futures goes down for most of the night, but then comes back. What I think is gonna what I think that means is, right now, the level that it's at right now is basically this level right here. If futures goes down, that means that means the markets are intentionally probably gapping us down, right? Gapping down, and intentionally going to make us come back up and consolidate just under the weekly SMA 20 line in order to break through it. That's a possibility too. Now, doing something like that eats a lot of time off the clock. But doing something like that, I guess technically could also flatten out the 1 hour. Because it's going to force us to come up, eat time, and then go up. And that could flatten it out. Okay? That could flatten it out for us to go up Tuesday morning. Okay? So yeah, that's a possibility, but wow, that's a lot of work. like this, right here. This past week, we came down under it, and we're just messing around. You know, so I suppose that's another possibility. If futures are down, if futures are down Sunday, then you can expect for us to be battling, consolidating under the weekly SMA 20 during Monday's trading session. You can expect that, you know, or we could try to break through it Monday morning and then consolidating on top of it, something like that. So, some various possibilities there. But no matter what, no matter the possibility, it doesn't even matter. We need a notch, and or even if it's just a tiny notch like this, it doesn't matter how big it is. Anything that stops the fall. But that notch, that even if it's a tiny notch, has to have a higher low. See, this one right here is a lower low. That doesn't count, right? That's why it didn't stop. It has to have a higher low notch no matter what. So that's the net of what I'm trying to say to you is however small or big that notch is, it must have a higher low to stop the fall. And until you get that higher low, you cannot begin the rise back up. That is, unless you kind of just start curling like this, right? See that? But, we'll see how easy or difficult the market's going to make for us. So, in the event that you get the notch or some way to flatten out and then go up, that's another possibility. In the event that you get that notch or a way to flatten out, then what that does, now I'm going to skip over to the 4 hour. Here's the 4 hour MACD. That allows the 4 hour MACD to stop and pivot and then go back up. So the 1 hour must create the notch so that the 4 hour here can stop and pivot. Until that notch is created, the 4 hour will continue to decline. Okay? So that is basically what my recommendations are to look for starting Sunday, going into Monday, Sunday evening, going into Monday morning. Look for the MACD on the 1 hour chart to try to create that notch. That is the key to me. I would say the notch is more important than flattening. Because why? Okay, because when you flatten, see, okay, see, look, here's an attempt to flatten right here. You can still go down as it did right there. See what I mean? So, but a notch pegs the 4 hour right there. When the 4 hour is pegged, I don't have any examples. When the 4 hour gets pegged, it's basically a V shape, right? It just comes down and then it just goes up. So that is more preferred. That shows more conviction to me than kind of flatten out, flatten out, flatten out, and then go up. That's a little bit. That shows a little bit less conviction to me because you needed more time to consolidate, right? I was like, why are you just flattening out? But you're not going anywhere, right? That means you needed more time to consolidate. Whereas, well, I just hightailed it, made a higher low right there. I just stopped it. See what I mean? That's why the notch is more shows more conviction than flattening out. Okay, so that's basically the 4 hour and the 1 hour S&P. Okay, and actually that is all I have for you guys today. I was going to keep it pretty much to the point. Show you the macro, the weekly, the daily, the 4 hour, and the 1 hour that I showed you here today because, quite frankly, it all boils down to those things that I mentioned here today, right? The notches, the 1 hour, the 4 hour, helping you keep things in perspective on the weekly, the daily, right? Like, we are not out of this yet. In fact, as that old saying goes, we have only just begun. So, yeah, get ready. Tuesday is going to be a huge one. Because, quite frankly, Jay Powell already knows what that number is as well, right? The CPI on Tuesday, and the rate decision obviously is affected by Tuesday's number, right? But I'm kind of starting to hear rumblings or reportings that, yeah, they think this December 1 truly is going to be the last and that there's going to be a pause, right? But that's hearsay. That's hearsay. That's what I heard. Simply because I'm getting seeing reports that huge global recession is coming. Um, uh, imports have been reduced significantly. So I know Jay Powell has to know that. They're not that dense, right? They have to know that. And so I think now they know, oh man, we might have gone way too far. So I think we just need to pause and let those three consecutive 75s, which we haven't felt the effects of yet, because those were more recent. We're going to feel the effects of those three consecutive 75s. Guess when? March, April, May. That's when I think the crash is coming. So, um, so there you guys have it. I hope what you guys saw here today helps potentially alleviate some concerns. Because boy, it sure did look rough, didn't it? Right there. It's like, woof, it was looking rough this whole week. But when you look at it from the weekly chart, it's actually, yeah, that's actually expected to have a back test week, considering we've been up the prior two. Yeah. And yet, despite this, I mean, it's not arguably, it was a rough week. Despite that, despite all that's happened, we didn't lose support. We haven't lost support. The weekly SMA is still intact. Okay? And on top of that, let me go back to this one. Let's look at the weekly again. The MACD higher than even the August. Even the August MACD, okay? But again, look at where the RSI is. Effectively, it's what we say has been reset back to neutral. It's not down here like ooh, that was ugly in October, sorry. October was ugly. Ugly. But we're not down here. We're actually in the middle. Okay? We're actually in the middle. Daily RSI. 29.9, okay. Big down week, okay. But you're not like down here like we were in June, right? So, and we're not down here like, well, it was October. think it was right there or so. Maybe it was right there or wherever, you know. So I think when we put things in a little bit larger perspective, I can make the argument that this is just being resetting the RSI for next week. As I've said in previously, to other YouTubers and such, it's like you actually don't want to be going into big events, rallying, being way up. You actually would rather you need to be down, not up, right? That's really what you need to be, and I can even show you here, right here. I was talking to LRF Car Reviews last night, actually, and here I was saying this. I'd like to see futures flattish or even slightly down, actually. No surges. Those are bad signs. I said this last night before the futures started to kind of take off, only to get pumping, pump and dump, right, as PPI came out, right? So you need to be when you read between the between the lines, what I'm saying is when it comes to things like the RSI, right, you want to be in neutral or even slightly down. That allows you to reset yourself on the RSI, right, relative strength index. And that I would rather be in that position, okay, than, this is not bad. No, I don't want to be all the way down here. Oh no, that's too far. That means you're too weak. You're too weak. I want to be like, right here. That's fine. Kind of like, you see that? For the last, since the last 2 months, we've kind of been in this range-ish. That's not bad. Not down here. See? Not like in October. Would you start getting down here in the RSI on the dailies? Yeah, that's like, you're getting that's where you're making newer lows, and you're most certainly not holding support lines. Okay, you are most certainly not. So we're not in that bad of a shape, even though this week was one hell of a week. Brutal red, yes, but we're still in the range. It's not over. Okay, it is not over, my friends. All right, so. And with that, if you'd like to follow me on Twitter, please feel free to do so. I post more real-time tweets. I didn't really tweet too much today because I actually started that live stream. Which, by the way, let's see here. Do I still have a screenshot of? I think I do. Hold on just one moment. Yeah, that actually went well. That was my first ever live stream that that I've ever done, and no, it was fun. It was just a small group, Mr. James Bond, Sky, and Hakuna. We were all just hanging out, talking about stuff, talking about the trends. So, oh, that was fun. Thanks for coming. I had no idea that I was even going to do that live stream until the moment I did it. So it wasn't anything that I had planned. I didn't even plan on doing it, but I was just like, I got to get on there. This is too much to sit idly by and just watch what's happening passively. Okay? All right. And please give it a like, share, subscribe, or a notify for my next videos to come. And with that, I leave you with my calling card. I'm Agent 000, the Wolf of Wall Street, signing off.